properties. That's the right mic. Just see that I'm live and dive into this. See if I actually am live. All right, testing 1 2 3 1 2 3. All right, I can hear volume there. That's good. I guess I should share this real quick. Before I dive into this live stream, we're going to recap the trading day. This will basically be a recap of the pre-market report. And the main thing is how price traded relative to the levels provided. And what's more important is the time. The timing of it is the key factor here. So just make sure I think that I look decent. Let me know in the comment section down below your thoughts. So basically, the NASDAQ QQQ daily year to date, you can see here at the extreme from where we opened $620 to the low of the year, we were down 10%. We've rallied off that low, and we are currently down 5% year to date. We're still holding beneath this trend line, this lower high versus the high here. Lower highs have held. The trend line is being tested. And right now, we're seeing the market ramp higher. I'm willing to shift my thesis in the short term based on this pre-market move. This is likely a move that will open. You can see here currently $594.66. If I had to guess, the market will likely open within this area here, and it will open obviously green. I'm going to extend it a little bit this way so the candle opens, you can see there. Likely around the 596 area. There was news of Pakistan mediators aiming for diplomacy to extend a ceasefire for 2 weeks as negotiators continue to hammer out the details. And that form of positive news is likely what is some accelerant to the already increasing price action. This candlestick in itself needs to be discussed because most people, when you acknowledge price action interpretation, they do not know what you mean. Price action interpretation for this specific trading day means price opened, it moved lower. This is what the wick is. You're moving lower relative to the open. Off those lows, buyers are coming in, squeezing the sellers. Sellers want to sell high and buy it back low. So the last sellers, people that keep selling into those lows, then they get squeezed out of their position. They have a stop loss to buy back their short position, and they have to then buy back the short, which accelerates the move. And when you accelerate with the news, it's throwing gasoline on an existing fire. The news is simply a catalyst for how price is already going to trade. So the entire report here, the main component that I'll discuss today is that today, Tuesday, the QQQ Before the Bell episode 11, the pre-market report lean was to the bearish side. I oversimplified it to just keep it condensed. I really wanted to say something along the lines of two directional, because the concern is that you open in favor one direction for the first half of the day, then you spend the second half of the day reverting that. And it's either you open high, can't continue higher, roll lower, or you open low, move a little lower, fail to continue lower, and as we did today, rally. The key levels, I'll skip the recap. If you want to review this in detail, you can subscribe on Substack at Beta Heuristics, at Beta Heuristics here on Substack. Enter your email for free. You can subscribe, get this in your inbox. 7:30 a.m. is when they typically are automated to send out. It's a pre-market report to help you understand the different scenarios and how you would want to prepare yourself for trading this. So the scenarios are basically, we are bullish scenario above $587.65. I'll get into why that specific level in a bit. And the NQ equivalent is above 24,326 points. Now, the time consideration, given that we had pre-market weakness, we already saw price continuing downside in the pre-market. The bull scenario activates in the first 30 minutes and holds through midday, carries the highest probability of a constructive close. A late recovery after 2 p.m., etc., is lower conviction. So we actually got the end of day continuation that the buyers were able to continue above and close above that 587. We closed 588.59 cents. You could say 588.60 cents basically, which is just above that bullish reclaim. We're seeing now in the pre-market an attempt to have continuation of almost $6. So your average sigma deviation based on the volatility range, not based on the 5 or 10 day. I'll get into those details a bit. The bear scenario is a rejection of that key level, $587.65, and then a continuation having sustainment below $584.69, this being the low of Monday, intraday's Monday price actions, low intraday, and that the target for the downside would then be the extensions of $581, $582, the NQ equivalent of 24,000, and the consolidation scenario. I think it's an oversimplification. I'm not sure. Let me know in the comment section down below how you think it could be better communicated, because the consolidation scenario really is completely determined based on, am I getting really blotchy? I thought my camera quality started to really go bad. Focus camera, please. Why is my camera property going to shit? Yeah, I look so pixelated. Do I need more light, less light? What's going on? Is it the glasses? What? Are we good, chat? It looked like there was a bunch of white blotches starting to appear on my OBS, and I didn't know if that was happening. I feel like it might just be happening on the glasses. Lock in. Here we go. The consolidation scenario is oversimplified and needs more detail in the consideration of timing. The timing is the most important factor. Where we're opening, if we're opening and within the first hour we're testing outside of the consolidation scenario's range, then the consolidation scenario is more invalidated. And there, I guess there is more so a fourth scenario I should begin communicating. In the fourth scenario is an initial first hour, 2 hours of the trading day, breach of the prior intraday range, then holding structure that reverses into the opposite direction of the initial move. So when we see today's intraday move, we are opening below the midpoint, 587.65, the previous intraday range. We are below the midpoint. Instantly, it is a bearish lean based on how we opened here. Based on this open beneath the midpoint, we, based on the report, already have a bearish lean into the open. How is price then opening and trading relative to the different scenarios? We immediately see that there is a failure to hold 587.65 in the pre-market, and you then have sustainment below 584.69 cents. What is the next target? $581, $582. we're seeing price have the continuation, and within the first 30 minutes, you're seeing price test below 581. And you can actually see that price, fair value price, it will not consolidate in a straight line. There has to be oscillation within the consolidation. Trending moves have more than, I would say, a majority of the day continuing in one single direction, a trending day. Today was a two-directional volatility session where you had an initial low a day, breach our extension, you try to break back up, but the initial move, within the first hour, you're almost always going to back test either the low of day that you've recently made or the high of day that you've recently made. You've more recently made that low, and on the bounce, it's just holding lower highs relative to the lower high wicks. The price action interpretation on the daily structure, we can talk about that, go back after the intraday, but the intraday is just your opening below the midpoint, initially bearish bias, buyers are pushing price higher. This is an opportunity for sellers to come in and push price lower. They reject the overnight gap fill, and you can see that this is sellers overcoming the buyers, having price continue down for the first 30 minutes of the trading day. A dead cat bounce is one way to approach this, where you have sellers in control within the first 30 minutes. Those sellers eventually take profit. They cover the short by buying back their market position, whether that's selling puts, or if they're trading the NQ, they have to buy back the market. They are shorted, they've sold it, they buy back the position. And that is what you could argue a dead cat bounce is. You are then making a slight new low of day. And this is what I love then, is the consolidation is occurring right along 581. You're holding consolidation here, which is holding a higher low point. This is higher lows versus the low of day. It's also higher low consolidation here than the initial low of day. You're consolidating at higher lows. Higher lows lead to higher highs. You're breaking higher and you're attempting to test that high of day. Just so you can see, this is our first high of day. And you're failing to test it. You're getting a consolidation flagging just below the open of the day. Change this to blue. This is our open. You're consolidating just beneath the opening price. And what does it happen? What needs to occur is, before you can have a full move to fill this gap and attempt to fill this gap, you first need to back test and hold the points that you've made of support. The higher low structure versus low of day is back tested when you're failing to make a new high of day initially. You're failing to make that new high of day. Sellers are pushing the price back lower, and sellers continue to push price lower from this point here, about, I would say, 130 all the way down until you're coming into power hour, the final hour. This is where the market makers, the people in the know that understand that peace talks will prevail, and that there will be a catalyst for structure to break higher. The price is already aligning with intraday. You're starting to hold higher lows versus low of day. You're breaking higher. The consolidation here that held immediately resulted in a squeeze, because the people positioned thinking price would go lower did not prepare for the potential bullish news, where anything that is relative to the Strait of Hormuz opening, the restrictions on the oil supply being lifted, any peace negotiations are going to have a positive influence, because price has been previously restricted. It has experienced volatility to the downside because of this news. So when the conflicts are resolved, it's a naturally, some people would think, oh, I thought we sell the news. That's not always the case. Not every nomenclature statement that you hear is always accurate. So when price is closing here, and it's really closing into strength, there is a slight wick. There's a little bit of profit taking, but into the close, you made a new high of day and you filled the gap overnight. This is buyers overcoming the sellers into the close. And if we view the pre-market very quickly, equities here, so this is just pre-market. You can see after hours, price has just at 6 o'clock rocketed higher. 594.27, 595.35. What were the upside bull targets? The bull scenario is on a reclaim of $587.65. Target then of the 593, 594, which is NQ 24,600. 24,666 was this recent high. You basically closed the futures into the highs, and then over the close of the New York session, for that very small amount of time where the markets are closed, to then the Asian session opens and the Japanese markets start trading, you've seen this gap up push to the upside, which should be the 24, is this old? I keep getting the wrong NQ contract by accident. So the intraday price action here, the high to the low, you can see for NQ, you're opening obviously below that midpoint, so there's more of a bearish sentiment, and your then downside target 24,000 is, did I say 24,000 here? 24,050, 24,048. The low of day on the NASDAQ futures was 23,941.5. From there, you can see the consolidation again above that downside fib extension that was shared. And then what does price do but get aggressive to the upside, and it finishes the day higher. And this should be a new scenario. I will work on communicating instead of consolidation stuck within the prior intraday range, within the first hour, within the first 30 minutes, the less amount of time it requires for price to break one end of the prior intraday range, if you have a break and then reclaim of that, and structure shows the potential for a V-shaped reversal, which we would argue today was a V-shaped reversal when we view the QQQ. I'll get rid of the overnight extended hours showing. So again, I think maybe the 30-minute would be nice to view for once. So here, all we have to really acknowledge is that there's this gap down that fails to hold. Price has continuation lower, but the price action interpretation, when you're seeing this 30-minute candlestick here, before you see any of this, and it's only now 10:30, this is a sign that the buyers have stepped into the market. When price breaks lower and then the buyers step up off those lows, buyers are stepping into the market. Someone is willing to be a buyer. Someone with volume and size. It's not a instant confirmation that price will break higher. It's the initial signal on this higher time frame 30-minute candlestick that's showing that there are buyers in this market. The next candlestick attempts to make a new high relative to the prior candlestick's high. A new high relative to that high, not a new high of day, but a relative new high. And you can see immediately there's negation. The sellers are still in control. This was the dead cat bounce initially, that there's profit taking, buyers stepping into this market who were previous sellers. The overnight sellers from here, where we close Monday, to then the lows of today, the market is down 1.7%. Initially, you're down 1.5%. The people that have been short from overnight buying back their positions, dead cat bounce. You're seeing then the following new low of day on this 30-minute candlestick. This is showing you that there is immediate buying volume. The new low of day has then immediate negation closing, and this is the very simple edge, how you approach the market consistently and are able to capitalize on high probability setups. The setup that when the 30-minute candlestick is able to close above the open to low midpoint, if you want the entire range, you can look at that entire intraday midpoint. I think the open to close is more important than the simple entire intraday range. Open to close, more important. That close of this candlestick above that midpoint on the 30-minute candlestick, the following 30-minute candlestick tests below and breaks back above that midpoint. That is confirmation that the buyers are holding higher lows, the structure's shifting in sentiment, and you're breaking higher and higher. This is price action interpretation that should be done from the higher time frame down to the lower time frame. The time frame I believe that provides the most value is the range between the 10 and the 30-minute. And you could do a lot of variations. Some platforms allow you to do very unique time frames, a 24-minute, a 27-minute time frame, whatever that you believe is the right flip of a candlestick's time frame, you do that. But finding a middle ground that is, it is a bridge between the high time frame, weekly, daily, and the small, immediate 1 minute, 3 minute intraday time frames, the shortest time frame. The intermediate term of the 10-minute, the 30-minute, that is the ideal time frame to me, I believe, for finding the optimal comprehension of how is structure holding. You're consolidating here beneath the initial open. If the buyers were in control initially, you might have seen stronger expansion into the close. But because you spent this amount of time from the close here, then an entire candlestick fails to break that high. 1, 2, you break it, you close, you're closing above the open on the candlesticks. The close is here, which again, beneath that US market opening price. And it's not until the candlestick has tested above, you have basically 1, 2, the third attempt, you close beneath it, the next 30-minute candlestick opens, and you have that continuation of the higher low structure that held. You're wedging into this close, and this 30-minute candlestick here, from the low to the high, that is a range of $4.50, 0.75%. That is rather significant. A short-term expiration contract that is out of the money with only 30 minutes of extrinsic value, very limited, no intrinsic value, because at this point in time, if you're trading something, very, very risky. This is not my financial advice, just hypothetically speaking, the highest return on investment would be understanding that the structure is consolidating here. The compression will lead to expansion. And the expansion is more likely higher given there is a gap to fill to the upside. The structure is holding higher lows versus the low of day. And relative to the year-to-date low, you're holding higher lows. So the higher time frames, there's a shift. There was this immediate panic given the conflict in the Middle East and the spiking price of oil. Risk on assets experience volatility. That's natural. The result of news of mediators finding pathways to opening the Strait of Hormuz, resolving this conflict, this is going to propel the market higher whenever this news leaks. That is why you can see this pre-market $5, $6 move overnight within the first 30 minutes, the first really, I think, few minutes of the market opening. And that is, again, the continuation. We saw this consolidation below the market's opening price, and once you had the acceptance being above it, you had then expansion. The sellers that thought that this prior rejection area would continue to reject, they did not think the gap would fill. They were on the wrong side of the bet, so the market is squeezing them out of the position. The late day shorts, the late day sellers are squeezed out of their positions. And the news is an accelerant to the direction that price was already moving. Price was already destined to eventually fill this gap. Just was it going to fill it overnight? Was it going to fill this gap intraday? And the news that acted as a catalyst to the upside is going to just continue to push price overnight, then higher and higher, essentially. So in the intermediate term, here at Beta Heuristics, opening, not immediately opening to full long hedge positions, be open-minded to bullishness on everything, add to longs. That is not the initial perspective. Year to date, the market is red. Do you want to be buying this market? That is the real question. I'm not at a point where I would be proactively, aggressively investing in this market because the concerns still exist. The risks remain. Just because news comes out that there may be peace discussions, that doesn't immediately negate the risk that the real risk that the actual data centers that physically exist in the Gulf states could be struck if Iran does not have a peace deal it deems acceptable. If the peace deal is not acceptable to Iran, they can strike not just the energy infrastructure, not just the water desalinization infrastructure. Iran has not allegedly struck hospitals, schools, those forms of infrastructure, allegedly. I'm not there, I don't know. Those are major concerns, obviously. The additional concern is that the large language models, these publicly traded corporations like NVIDIA that have data centers in the Gulf states that have infrastructure there, if those facilities are struck, that then has consequences from the real world. Then that real world consequence leaks into the stock market and it impacts everything. And that is a major risk that remains. That is the real black swan event, is that continued escalations by Western states against Iran results in Iran believing peace is impossible, therefore go beyond what they have deemed accessible or acceptable so far and strike other points of key infrastructure. The idea that we will suddenly allow peace negotiations, there's rumors that negotiators have been threatened, that there have been bombing of buildings where the Pakistani mediators within their block where they were staying, bombs were dropped on those places. So I don't know what to believe online anymore. I saw one news headline that a synagogue in Tehran had been bombed by Israel, and it's kind of the kind of headline that makes you really think everything is inverted, because you would think it make sense. The real concern is that the equity markets experience volatility because real world spillover from this conflict. It's already spilt over. Maybe the worst has already passed. If the 10-year yield is starting to decline, the risk of inflation due to an energy shock from the Iranian-Israeli-US conflict, this inflationary shock could have experienced its peak. If the bond market, which is larger than the stock market, if the collective bond market is seeing yields move lower, yields moving lower, prices are moving higher. People are buying bonds. Maybe they're buying bonds for a safe haven, risk-free return investment. Maybe the Cayman Islands funds have replenished and now they're ready to buy more. Because when you look at the treasuries, who's buying the treasuries? The Fed's data. Previously, there was no evidence that the Cayman Islands, the hedge funds, were such a massive player, and then they are a major holder of treasury bonds. So that's one vehicle in which the markets can be managed. And we can see if the 10-year yield is declining, the idea that risks of the oil energy shock continuing, if the risks of oil rising in price were ongoing, we would likely see rising 10-year yield, rising rates, because inflation risks are rising. If inflation risks are rising, the 10-year yield, the longer term and the shorter term, the whole yield curve would start to rise if those inflationary risks were not immediately transitory and were instead sticky and became a long-term consequence of this conflict. That is the major concern, is that the amount of time it takes for the cargo ships to transport the oil, they're moving through the ocean at the pace a person would ride a bicycle. When you understand the amount of time it takes, the delay, there's an immediate shock in the energy markets for crude oil due to this conflict. And it's mostly due to over speculation, and because everything has become a highly speculated, traded vehicle, and no longer just is crude oil a simple commodity, but is something that has derivatives of derivatives that not just retail but institutional investors are playing around with. And that creates volatility when you introduce derivatives to not just commodities, any financial product. So we've seen crude oil spike at $119.48 on the 9th of March. Here you can see a slight lower high. The high here being $117.63. Prices seen movements lower. We're shifting to bearish red, so you may see continuation lower. Last time there was this move to the downside of 17%. So this candlestick here is already a move of 6.5%. So, excuse me. Cut it. Edit that out. Edit that out. Sorry, chat. The compression has led to expansion higher. Higher low, year-to-date consolidation. This conflict has acted as a catalyst to accelerate the direction that price was already moving to the upside. And this is really a massive volatility. You open higher, you push higher, you then close lower. You close red on the day here on that March 9th here. So In the short term, this news, it's acting as a headwind to crude oil. If negotiations and a pathway to peace can be achieved, then we would see crude oil decline, prices at the pump decline. But of course, the prices at the pump, they will never fall as quickly as they have gone up. It is an escalator up and the stairs back down for the price at the pump, because the speculation and greed of these corporations to maximize profit, at some point prices will come down, but it is not an instantaneous, oh, crude oil from this high here to this point here, crude oil is now down 15%. So we should see the price at the pump decline by 15%, right? That is not even remotely the correlation. There's a direct causation. The percent correlation of the move of crude oil to the local community you live in, your regional community. It's very different in Australia than it is in Arkansas. It's very different in Mumbai, India, than it is in Bristol. Who cares where you're looking at it? Prices are going higher because oil prices, crude oil going higher, results in everything that is transported via petrol, crude oil. It will then go up higher. So seeing crude oil decline, seeing risk on assets move higher, these are good things to see. This is likely a positive catalyst for Bitcoin breaking out of bear market territory, ladies and gentlemen. So now Bitcoin, the end to the war, positive, bullish move for risk on assets. You can see this trend line break here on Bitcoin, and you're making movements higher. It's up 2.6% on the day. Whether or not Bitcoin can break and hold above 72,000, break and hold closes above 72,000. Not we tested $72,100 per Bitcoin, we closed $71,000 per Bitcoin. No, sir. You need to close into strength. Progressive bullish closes. This area here, this is created for a reason, because the buyers had stepped in. They were convincing me in the short term of shifting the bias from bearish to bullish neutral. And that was a miscalculation. It was a fallacy, because immediately before I'd even uploaded clips based on this information, before the video had even finished processing the live on YouTube, the sellers had stepped in off those highs and rejected, and you closed beneath the 45,000, the 46,000 area that really is required to show the structure is shifting here, and you can then attempt to fill this gap that occurred from January's close into February's open. That month-to-month changeover, that gap down, remains unfilled. And in the short term, when prices above 70,000, 71,000, I believe, is the threshold for Bitcoin being in or out of a bear market year to date. The Thinkorswim platform, the first trading day is the 2nd of January, not the first trading day of the year. So it's not exactly correct data. And whether or not Bitcoin is closing above $71,000, $72,000 per Bitcoin, that is what shifts me from short-term bearish to short-term neutral. I become open-minded to the idea of hedging the portfolio with MARA, which has currently had a green day of 1.25% and is up 30 cents, 25 cents overnight. As Bitcoin is moving higher, risk on assets are reacting positively to the potential de-escalation of the conflict in the Strait of Hormuz. These risk on assets rallying, I'm more open-minded to investing in something that, this year to date is still slightly red, At the extreme, it was up, what is that? $2.25. So it has room year to date. If you look at the weekly max range, you're trading beneath levels that were not seen for most of 2025. Most of 2025, Bitcoin, despite Bitcoin holding prices more elevated than it was previously, MARA still trading lower. I'm not providing investment advice and suggesting that you should or should not invest in MARA. I don't currently own any shares. I am not a proponent of owning it. I'm simply analyzing and discussing it as a means to hedge your portfolio with calls or puts, never selling shares because then the risk can be extreme. But when you buy a call or buy a put, the max you can lose is that premium for it, and the risk is immediately known, whereas short selling, that risk can be unknown if the price starts to squeeze and squeeze, especially overnight if your broker doesn't allow you to cover it. But that's other sides of risk, and this isn't financial advice. MARA can provide, as a business, they own Bitcoin, they mine Bitcoin, and they are a proxy for Bitcoin volatility without actually opening a cryptocurrency account. I've said this multiple times, but that is the simplistic breakdown of this company and why I pay attention to it. It is a Peter Thiel project, everyone's favorite deep state agent. He's from the PayPal Mafia to Palantir and MARA, these businesses that are highly successful because they have government contracts. I wouldn't be surprised if there is upside potential when you've really been stuck consolidating yearly here just above these lows. Obviously you can go bankrupt. A stock can go to zero. The risk of a specific stock and that board of directors is very different. The C-suite executives for one business compared to another, it's very different. But overall, I would argue that this company, being a Bitcoin proxy, could be an argument for a 1%, 0.5%, 2%, whatever percent of a portfolio you deem worth the risk. If that went to zero, it would not destroy and bankrupt a portfolio. But if this stock explodes, if the stock goes up 100%, if the stock goes up multiple percent gains, if it does a 10x, a 20x, whatever the gain is, not saying it will. I'm not giving financial advice saying it will go all the way to its all-time high. But if it does, hypothetically speaking, you're talking about an 800% gain on shares. So this is not guaranteed. Past performance is not indicative of present or future performance. I am personally becoming more open-minded to hedging a portfolio with these shares. That is the long and short of it. And as long as Bitcoin can break and hold above that 71,000, 72,000 area where it's out of a bear market and structure is holding bullish consolidation, I become more open-minded to Bitcoin proxy hedges. So we're going on the third month. We had one red month here, the second, and now this is another inside month. We're trading within the same month, the same 2 months range. At some point, the compression leads to expansion, and I'm not giving any investment advice. I'm just thinking through my ideas on the channel and becoming more open-minded in the short term. I've always been bullish Bitcoin in the long term. It's just, when is the bottom holding? When is this the point where you want to be risk on adding to these positions versus risk off, not adding to them or closing them? It's a dynamic mindset. and long-term bullish and shifting bullish in the short term, I become increasingly open-minded to hedging portfolios to the upside, potentially with MARA or other Bitcoin proxies. Again, do your due diligence. Do not construe this for financial advice. Do not clip this and misconstrue my words, chat, okay? Don't do that. Not cool. Bitcoin is trading within the same range it has traded for the prior 2 months, for March and February. Eventually that compression leads to expansion. If the expansion is to the upside, I personally would want to be positioned where my portfolio gains from that upside expansion and that volatility that Bitcoin provides without having to invest in a cryptocurrency wallet or a platform like Coinbase, I should say. What is our year to date on this? See, this is showing some nice consolidation because Coinbase is a stock that will not directly move correlated to Bitcoin, but it has very similar underlying factors of Coinbase being the platform that allows cryptocurrency transactions, but also the fact that they store Bitcoin on their balance sheets as well. So when the price of Bitcoin goes up, their share price goes up, obviously. Year to date, red. Would you rather be investing in something that is year to date red 24% or something that is year to date green 24%? Do you want to buy a dip or do you want to chase and buy highs? I'm asking, I'm not giving you advice. I'm asking questions here, chat. Answer in the live chat, damn it. Answer in the comment section. Do it. Do it. Do it. Do it. Sorry, I gotta clip that out. Don't do that. Don't misconstrue my clips, chat. Only I can clip myself out of context. You can see Bitcoin compared to Coinbase in the same year-to-date time frame, right? Same year-to-date time frame. Just beneath 30.9% year-to-date from the high to low retracement, just below the 30.9%. It's as if they are highly correlated due to causation. To what degree? Does the tail wag the dog or the dog wag the tail? You let me know in the comment section down below, chat. Here's Coinbase, year-to-date red. Again, year-to-date red, 24%. What is Bitcoin year-to-date? Again, year-to-date, there's a difference in, this is the second trading day of the year, not the first, but based on this data, it is down 19.5%. So you can see that Coinbase has a more extreme movement, just slightly, compared to Bitcoin because it carries different forms of risk. Obviously, it's not a one-to-one correlation. So that's the main things I wanted to talk about. We're seeing, are you shitting me? Are you shitting me? They've basically just really sent this thing. They've really just said, hold my beer. Wow. So this is just, further aggressive expansion live, I guess. The market futures testing up 2%, probably going to gain another 1.25%. Could probably end the day green 3.5%, 4% if it gets that continuation of a massive upside stick. This could be, the kind of short squeeze that just has continuation over the remainder of this week. That doesn't seem out of the question. Testing our yearly open would be a continuation of three. If we have continuation of 3.5%, we're breaking back year to date, break even, year to date slightly green. I shouldn't jump to conclusions and say that's exactly what we're doing, but we are seeing a rather aggressive move on these futures. This could completely unwind. This could completely undo itself, but I mean, simply based on this was Monday's. Was that Monday? I keep having the wrong trading day for some reason. Monday's intraday range here. So we're at that second deviation now, 24,855. We broke above at 24,869 and a half. That's the second extension already. So this is some serious aggressive buy-side liquidity coming in, having just pure continuation. There was volatility lower, then breaking just higher. It filled the gap here for a moment and then just broke back upside. Just want to see what does that look like on the 1 minute chart? Is it just like one candlestick? That really interesting. Just higher, lower, close, breaks higher. Whether or not it can consolidate here above the second deviation level, this is what will determine if the pre-market can sustain this area and you open at 9:30 on the 8th of April 2026. Whether or not you open green 2% or not will really be determined whether take two. Whether or not the market opens Wednesday, April 8th, 2026, green 2%, whether it does or does not, is determined based on the consolidation above or below 24,855. This second Fibonacci level price has gravitated to it, and the consolidation above it opens the door for further expansion all the way to 25,260. Not in an instantaneous move, not overnight, but over the remainder of this trading week, I would argue. Range of 1.5%, 380 points. So I'll wrap this up now. I've gone a little longer than I had intended. Very quickly, the report. So again, feel free to like, comment, subscribe. It helps with the algorithm across Substack and Instagram and here on YouTube. So please like, comment, subscribe. I'm trying to break 100 subscribers on YouTube. I'm stuck at 24 subscribers on Substack. So if you could please like, comment, subscribe, I would really appreciate the engagement. And the report had provided the volatility breakdown, the compression on the smaller time frame sigma deviation value. I was trying to signal that the baseline expected range for Tuesday is $6.10 based on the implied volatility, which is above the 5-day sigma deviation value of 4 3/4. So the idea that the market is suggesting more movement on Tuesday than on Monday, which we obviously saw. The NQ baseline being 260 points, while the sigma expansion towards, when we see the expansion of volatility towards our sigma bands, the sigma deviation values, I should say, the calculation of the sigma deviation over the last 5 days, over the last 10 days, when you see the expansion beyond the baseline, I refer to it in, I think I've referred to it in an incorrect manner. Here is with sigma expansion. It should be with volatility expanding towards 450 to 500 points. And the range here from the low to the high was 510 points. So off by about 10 points. The numbers will have to be adjusted as more data comes in. The current futures session here with further movements higher, this is pretty aggressive, I would argue. You're probably going to test that level relatively soon. I don't really see many headwinds before then. This volatility that is currently occurring in the futures, whether or not the market sustains this 2.3% gain, this will really have the NASDAQ now open well above all the resistance. So now you're looking at, is it going to open somewhere around here? That's the new question. Is the continuation going to have another 2 or 3 points over the pre-market and really get the 605 and a half, 606, $606? There's this slight gap here. $607.69, so that's the unfilled gap open. That's where the gap opens. I actually just leave it unfilled gap. So I would have thought that this is something that occurs by the end of the week. Market makers said, hold my beer, I will do it overnight so that retail cannot have any fun. Cool. Thanks, market makers. Really appreciate that. Really appreciate what you do for us. So, I don't know, I doubt there's anyone in chat right now with questions. But if they did, you could drop questions in the chat. I think it's pretty clear that the news has acted. The idea that there is peace negotiations, the mediators in Pakistan putting forward news proposals that may or may not be having positive impacts. Breaking, Iran accepted Pakistan's 2-week ceasefire proposal. Ceasefire was approved by the new supreme leader. Taco Tuesday, I guess. Trump agrees to suspend bombing of Iran for 2 weeks. He calls it a double-sided ceasefire. Conditions: Iran must agree to complete immediate and safe opening of the Strait of Hormuz. Says all military objectives have been met and exceeded. Okay. So the idea that the Strait of Hormuz is being opened as a result of these peace negotiations has resulted in speculation, risk on assets rising higher. This is across the board from the QQQ to SPY, I imagine, is also. SPY is up. Wow. It's up a lot more than the NASDAQ is. And let's see what coin is doing. Yeah, coin's up nicely over crude oil. Is that still? Yeah, crude is just collapsing now. Wow, look at that go. Look at crude collapse, ladies and gentlemen. That is what you call a falling knife within minutes. Wow. Within hours, you're undoing days of upside progression. So this will hopefully result in movements lower for prices at the pump. It will not occur immediately, folks. You will not see an instantaneous decline of price at the pump for gasoline. Over the next few weeks, the next few months, we would hope to see declining oil prices at the pump. But this is pretty cool, get to see it live, the impact of news, the agreed ceasefire resulting in declining prices for crude oil. I imagine XOM, which trades following the price of crude oil, it is $163.90 at the close, $163.91 at the close. Currently, pre-market down to $152. So the NQ futures just seeing further and further expansion. Very interesting to see how risk on, risk off assets are reacting. I would be curious to see how the 10-year yield trades tomorrow after this news. So it looks like the 10-year yield is coming down. I don't know if this is live. Huh. Interesting. Cool. So we're seeing risk on assets gain in value from QQQ to the SPY, obviously highly correlated, as well as Bitcoin breaking out of the bear market territory. Let me know in the comment section down below whether or not you think Bitcoin will have a massive recovery year to date, or if you think Bitcoin is a bust. If you are a bull or bear on Bitcoin, let me know in the comment section down below. How are you positioning yourself? Are you a cryptocurrency holder, a speculator? Are you hodling? Let me know in the comment section down below your thoughts on Bitcoin. If you are interested in trading the NASDAQ, understanding how these levels were created, feel free to subscribe. It is a free subscription. The QQQ Before the Bell beta heuristics on Substack. I am Chris McVitie, providing these before the market opens. They hit your inbox around, I would say, 7:30 a.m. Provide you the different scenarios, the key levels that determine which scenario, how sentiment will likely trade relative to those scenarios, the volatility section. Try and acknowledge that there will likely be more movement Tuesday than on Monday based on how the compression of the sigma values is occurring, and a session summary, just condensing it. I believe I also published this in a condensed note here, a condensed note for the people that really just want the key levels. Try and make it as quick and readable as possible, but not really getting any engagement. Doesn't seem that I can get any subscriptions to Substack here. I'm trying my best, folks, to provide value and provide consistency. If you are interested in investing or trading in the NASDAQ, please feel free to like, comment, and subscribe, especially like, comment, and subscribe on Beta Heuristics here. This is where you can find the daily QQQ Before the Bell report. You can also find the other, where is my discussions on Bitcoin, as well as the seasonality research, the very brief analysis of the 4 major US equity index ETFs and how seasonality influences each of these. If you are interested in this, feel free to give it a like, comment, subscription to Beta Heuristics. I would greatly appreciate any and all engagement across all the social media platforms. I appreciate it, folks. Until the next recording, stay green, traders.